But the one little aspect about him which some of you may not know is that he is an ex-HDFC banker, though fairly early in his career. So I'll leave it to Ghosh to talk more.
Hi, good morning. Today I just want to briefly tell you, my take in terms of opportunities and challenges which the whole small finance bank faces. We have a presentation, and if you want, we can send it to you, which has the numbers, etc., whatever. But here, I'll just talk to you from what we have seen in terms of so far, in terms of the small finance bank, in terms of opportunities and challenges. To start with, the small finance bank, one has to note, is a specialized institution which has been set up primarily to serve the unserved and underserved. So in a comparison with Bandhan, which is actually a universal bank, and also HDFC, etc., one should keep it aside. This is a specialized institution which basically is to provide, help provide the full range of services, to the unserved and underserved segments of our society. In terms of market size, obviously, as mentioned, I worked with HDFC, and we've seen, and before that with Citi, etc. And the financial inclusion program actually, in my mind, started in 1985. When Citi targeted, along with other institutions, foreign institutions, HSBC, etc., the middle class, to start providing them full range of financial services. Before that, you had a savings account, you had a fixed deposit with banks, but that really doesn't mean financial inclusion in my mind. Financial inclusion in my mind is providing the full range of services with the middle class or affluent required. And that, over the next 10-15 years, from 85 onwards, not only came from the foreign banks, but it's great institutions like HDFC, ICICI, the private sector banks, the finance companies, the insurance companies, etc., and the mutual fund companies, the whole insurance. And today, the middle class and affluent are, you can say, fully, financially included. To that extent, apart from that segment, and I think apart from the corporations, the rest of the population is either underserved or unserved. So, in terms of population, it's a huge, huge segment which needs to be served. On the lending side, the microfinance institutions in the last 10 years have provided, loans and have expanded, but generally it's only one type of loan which has been provided. So even from that aspect in this segment, we've not been able to satisfy all the borrowing requirements which are there in these segments. And specifically, if you look at the micro and small SME segments, they've not been really targeted by the by the microfinance institutions, including things like we talk about affordable housing, but actually have we really penetrated and provided financing for that segment is also still open. On the liability side, we've seen huge amount of deposits which are in the unorganized sector, which still is there. And there are various estimates of that, in terms of what is the size of that. Part of it obviously could be, unaccounted for wealth, but a large part of it is genuine savings, which still remain outside this, the organized financial sector. So that also provides a huge potential. In addition, of course, we have remittances, we still, a lot of our poor people rely on, just so remitting money through people, etc., not through the organized services. So remittances provide a huge opportunity, which hopefully Payment Bank and others will take up along with us, the small finance bank. And there is opportunities also on the third-party products, especially on insurance. Insurance penetration is very low in this segment, along with maybe later on, with sophistication of customer levels and understanding, we could also offer them mutual funds, etc. So these are, I think, in terms of opportunities which are there, Now, if you look at the small finance banks, there are 10 applicants, One good thing is none of them have yet dropped out, unlike the payment banks. Largely it is because most of the applicants or those who have provisional licenses are not in a startup kind of situation, They are established businesses. But each of them actually have their own DNA. Out of the 10 applicants who are there, 8 are MFIs. And out of the 8 MFIs, you could say 2 or 3 of them have a national footprint and have fairly large asset base. The rest are small, either very regional or community based. So each of them have a different approach. So in order to understand the SFB space, you need to go and understand each of these applicants. It's not a standard approach you can take to all. Then you have a local area bank and you have an asset-based company, which is also fairly large. So these, as what we see, each of them will approach the future based on their DNA, and it's not going to be a standard approach by all of them. Now, in terms of challenges, I think there are 2 types of challenges which we are facing. One is the immediate challenge, and that first part, of course, is we have to go through a lot of legal, structural changes, raising capital, etc. Like us, we were 90% foreign owned, we had to reduce our shareholding, along with Equitas, from high 90s to below 50%, etc. That was the main reason for doing the IPO, So all of us have to go through this legal and capital restructuring, which is a challenge, which is not easy. Second area is the rules and regulations and policies relating to SFBs are still evolving. Okay, we are in constant dialogue with the Reserve Bank, and draft policies are circulated. We discuss it, we go back and forth, and the final policies are still not out yet. So that creates at present a certain level of uncertainty. And as an example, I will give you the whole branching policy. Now we had assumed that what the branching policy was permitted to Bandhan, which is the open regular branches and the microfinance branches were doorstep service centers. And then you had the unbanked rural branches, and the unbanked rural branches was 25% of their regular branches, not including their doorstep service centers. So we had assumed that that would be the same policy which would be followed for small finance bank. That's not yet been finalized. In fact, the RBI is planning to issue a circular on branching for all banks sometime in September. And that would determine how our distribution structure is going to be. Okay. Secondly, when we are dealing with such a huge mass of people with low ticket transactions, we have to automate as far as possible, and if we are dependent on paper, and paper-based documentation, etc., then it becomes, the whole process becomes very, very expensive. We are investing a lot in technology and to automate it as far as possible. Bulk of our customers have Aadhaar, so eKYC is very easily, we can implement it, and we are all, right now implementing it. But, there are issues still like requirement of a wet signature for application. Okay. And now, again, the government, the Ministry of Finance has introduced a centralized KYC, body. Again, you have to upload all the KYC requirements in terms of ID proof, address proof. Again, it has to be paper-based, scanned, uploaded. So, there is these kinds of changes actually, and which are going to impact our business, and impact the way we are going to do business. So these are the uncertainties which are still going on. So which, from a regulatory point of view, presents us a lot of challenges. In terms of, a lot of us, again, different institutions have taken a different approach. The smaller institutions have actually totally outsourced their technology to one company and left it very simple. But larger ones like us are investing a lot in technology through various IT service providers. So to integrate them and to make them work is a big challenge. Again, choosing the right channels, and I think Paresh talked about it earlier. Choosing the right channels of distribution for this segment and multiple channels, because one of the things which have come up repeatedly with us for this segment is they want access. And if you want to provide access, not give them access only through the branch channel, which is very expensive, right? So you have to develop alternate channels. Though ATMs probably are now getting phased out among the middle class and affluent, ATMs are still something which these people want, but not the kind of ATMs which you are used to. They are looking for something like a biometric ATM. Okay, they don't. They don't want to remember numbers, or they can't remember numbers in terms of this thing. So they still want biometric. They want ATMs, which we know over time will get phased out. So you have the branch, you have the ATM, you would have to put in banking correspondence, you would have to provide them some kind of phone banking services, and to a certain extent internet services also. So to put together all these channels and slowly phase them in for this segment is also a big challenge. People transformation for us is the next big challenge, both in terms of retraining our staff from purely they are used to just lending, now suddenly they have to also take deposits, etc. Building in the capabilities of new businesses like lending to micro and small businesses is not easy, it takes time. I think all of my friends in the frontier know that, in Subhashri. Yeah, so building up that is definitely a challenge for us. So the people idea is, the people, people issues are also a very big challenge. On the other hand, as Chandrasekhar kept telling us, most of the microfinance staff have huge expectations of once you become a bank, but they also have to improve their capability, once they become a bank. So that managing expectations of people is a challenge. And finally, from the management team, we've got to upgrade upgrade your management and governance. One of the things which keep hitting us as we become a bank is the whole issue of risk management and compliance. You know, that's so huge today in banks. That is a culture which we have to bring in without losing the customer focus. Sometimes I feel banks are only doing risk and compliance and have forgotten the customers, you know. So I think, but we have to bring in a balance for that. So in the long run, I think on the liability side, if you look at it, there are basically two strategies which the small finance banks are taking. One is trying to follow the Bandhan model, where they are opening branches, liability branches, and actually going after the middle class and affluent, possibly targeting customers of the public sector banks, you know, not so much the private sector banks. But in my mind, then you're moving away from the central objective for which small finance bank has been set up. Okay. The other, which may be a bit more challenging, is you keep your target market the same, you know, the unserved and the underserved, and try to bring in the huge deposit base which these people keep outside the financial sector. But that's not easy. And that's not, it's not there's a popular misconception that it is all interest rate related. It is not. We've done a lot of studies of customers of Sahara and others, you know. There are different elements which come into play. One is convenience, service. Believe it or not, there's huge amount of trust, you know, in them. So there are a number of different elements which play out, you know, which makes this segment of the population keep money in the unorganized sector. And when we develop our products and services, we have to keep that in mind and build it into our products and services. And slowly try to build up our customer base so that they move that money from the unorganized sector to the organized sector. So that is a second part. One is you could follow the traditional path and follow what, try to chase the HDFC bank and, the private sector banks, which I feel is fraught with danger. I feel the second part, which is trying to figure out and get them to move from the unorganized sector to the regular, banking sector would be really the objective we should have. So, on the asset side, obviously, despite the fact that large portion of our business today is in the group lending business, unless we are able to diversify over the next 4 or 5 years into other segments like micro, small SME, housing, whatever it is, and provide a full range of products, loan products which this customer segment requires, that is going to be both an opportunity and challenge for us. Finally, I think, in 5 years' time, as per our license, we can apply for an universal bank license. And I think our goal should be not that we want to become another HDFC bank in 5 years or something, but to become a mass market bank, And as we have seen over the last 10-15 years, public sector banks have been losing market share at around 1% every year, And according to Nandan, with the technology disruptions which are going to take place, this is only going to increase. So I think there's going to be a big opportunity for successful small finance banks in 5 years if they can establish a good track record to become a mass market bank, and that's our goal. So that's roughly, I think, our challenges, immediate, long-term, and our opportunities which are there, which I wanted to talk to you about. And if there are any questions, you're welcome to ask. Thank you.
So this CRISIL has come out with a report on the opportunity set for microfinance institutions. And they talk about 2 lakh crores being the total opportunity set based on their bottom-up study. Households in India, only maximum 2 households you can lend. And they find opportunity more in the BIMARU states now, saying that many of the south states are almost saturated. It almost suggests that if at the pace which these MFIs are growing right now, in 3 years you will hit the wall. It seems very, I mean, just want your feedback or your thought on this, that do you think this 2 lakh crore number is right? Because you will be hitting 1 lakh crore, the industry will hit 1 lakh crore this year. And how do you see opportunities for small finance banks? If this is true, then you may have to look at other opportunities to lend.
So I think the one thing is, in the group lending business, I don't know when we are going to hit the ceiling, and I think it is prudent, and that's why many of us actually are moving into different segments, like the micro and small SME business or affordable housing, and some of us got into used vehicle finance, etc. So I think in the long run, to grow, you have to get into different segments. So if you say that the group lending target set of customers is unserved, you have to move into the underserved segments. So I think that is important. Very frankly, numbers, I'm this thing, we felt a few years ago, okay, we are reaching a saturation point on the group lending. Yet every year in the last few years, we've been adding 1 million of the group lending customers. So really nobody has a real good fix on that. The other thing is, a lot of people try to equate microfinance only with the rural sector. But our customer base today is equally divided between rural, semi-urban and urban. So the target customer base is spread across these geographies. But to me, to us, definitely on the group lending side, and the question I also raised with the banks are definitely moving into the group lending business also, and will squeeze out the microfinance institutions in the future. So unless you are able to diversify your target customer base and business, I think you can run into a danger.
So Samit, one question. I think there's a perception in the market that demand money comes at a cheaper cost. But if you look at it, the cost of servicing the demand money, which is CASA, you need to assimilate the technology, manpower, core banking system and so on. My personal experience, it is almost 500 basis points. So in that way, you will have a very limited advantage of lower cost of capital.
See, the thing is, I think small finance bank, first of all, if you look at CASA, right, the CA portion actually comes from really cash management. It doesn't come from, cash management is the main service which brings in bulk of the current account balances, which certainly most small finance banks won't have. We will have to depend very heavily on the savings balances. So to that extent, we are handicapped. But if you look at our funding costs today, our funding costs are fairly high because our borrowing rates are, when we borrow from banks, it's anywhere between 10 to 12%, right? Once we become a bank, that funding cost will come down. Overall funding cost is expected to come down. So to that extent, it is this thing. But CASA is, for us, is only some.
Sir, a quick question on your liability side. You seem to indicate that you are more comfortable actually trying to convert the unorganized savers. One would have thought that public sector banks, at least on the trust side, probably were better equipped to do that if at all it was possible. Are you treading a path that's a little difficult for new entrant?
So definitely public sector banks have a big government owned, people have a lot of trust on them, yeah. But unfortunately, you know, if you see the service they provide, especially to this segment, you know, is appalling, you know. And that's one of the reasons why they've not been able to garner, you know, the savings from this segment. Most of the Jan Dhan Yojana, etc., which accounts which have been opened, people actually use it only to get their DBT, you know. They pull out the money and then put it somewhere else, yeah. So as I said, you know, I mean, there are different attributes which are very important for this customer segment. One is convenience and access, you know. They don't want to, you know, I mean, most of the unorganized people, the service providers actually provide them doorstep service, you know. Their quality of service is far superior. They treat them with a lot of respect, you know. So then you have the issue of, you know, I mean, even in press you might say Sahara, this, that and all that, but they have a lot of trust in them. The other element which they detest is when they go to the bank, you know, or a public sector bank, the kind of documentation they have to go through for even a simple transaction and the way they are treated, you know, even for a withdrawal, you know, is what puts them off. You know. And that's why actually we are very keen to that we are able to simplify the documentation process for this customer. But between the various regulations which are there for KYC and centralized KYC, all this which is coming through, I don't know, will end up probably as complicated kind of this thing. The final thing is, among them, the community connect is very important. Some of the public sector branches, the branch manager has a very good community connect, so they garner a lot of deposits from there, but most of them don't. But the unorganized sector, the people who use people or agents who are from that same community, you know, and has a very good community connect. So those factors are much more important to them than just pure trust or interest rate.
This Bandhan, the kind of deposits they got from small customers is kind of sometimes astonishing. Now, is it something that you feel is replicable in more and more HDFC come? Because there's just so much money lying there, they'll all come to you when you open them.
I think it will
Or is
take
it
time.
an extraordinary thing that happens?
No, I think it will take time. You know, I don't think we can build the trust and all that overnight. And even Bandhan actually, if you see where is, bulk of the deposits today are from wholesale deposits. It's not, on the retail deposit portion, I don't know, what is the percentage? 2,000 out of 8,000.
16, 17, 14,000.
So, the retail portion is relatively small compared to it. And again, the retail, which there are two sides, you know, they have actually got their existing microfinance customers to open accounts. So that forms a small portion, very small portion. But the retail branches are actually going after middle class and affluent, you know. And especially since they have large number of branches in the eastern side, and where a lot of the public sector banks in the which are headquartered in the east are not doing that well, they have a relatively easier market in the east. How they will do in the rest of the country, I don't know.
Also, I think one real thing you have to take an effort, all SFBs, is to just make sure the branches don't become high cost,
Right.
flashy offices.
Right.
There's a tendency to gradually go there. Just keep adding one feature, suddenly you have a high cost branch.
Right.
So if you have to make this successful, you really have to keep a low cost branch.
Right. See, the there's a dilemma which we have. You know, if you look at our existing branches in the third floor somewhere, in some apartment, little rooms, 2 rooms, etc., you know, where we are paying a few thousand rupees in rent. But when we ask the customer, that doesn't give them the confidence that I can keep money there. I can borrow from there. But whether I can deposit money is another issue. So then we ask them, what kind of branch do you want? I want a branch in a Pakka building, right? And in the center of the city, right? So there are some aspirational kind of thing they have. And it's more, I think, branding, you know. So I think we have to keep our branches relatively small because they will not come to the branch, but they want to see that this is a sort of safe place. So from that perspective, because now we are moving from a loan giving to a deposit taking, we have to invest some money there, you know. But obviously we can't build palaces or cathedrals like the old British banks had, no. You entered, you felt like you had entered a church, right? And all these priests were sitting there, you know, hoping to bless you. The cathedral design. Yeah. So, okay, thank you very much.